The global economy runs on water. Oceans and seas are the invisible highways that connect continents, making it possible for goods to move from one corner of the world to another with astonishing speed and efficiency. Every day, container ships and tankers crisscross the oceans, delivering everything from sneakers and smartphones to oil and grain. These vessels are the lifeblood of modern civilization, quietly ensuring that store shelves stay stocked and factories keep running. This maritime superhighway is the backbone of international commerce. So reliable, we barely notice it until disaster strikes. When a ship is delayed or a route is blocked, the ripple effects are felt across the globe, from rising prices to empty shelves. At the heart of this system are a few critical choke points, man-made canals that act as essential shortcuts, saving thousands of miles and weeks of travel time. These narrow passages are the result of human ingenuity, carving through continents to connect distant oceans. The Suez Canal connects Europe and Asia, allowing ships to avoid the long and treacherous journey around Africa. The Panama Canal links the Atlantic and Pacific, transforming global trade by making the Americas more accessible and shortening routes by thousands of miles. Without these canals, ships would face long, perilous detours through dangerous waters, battling storms and piracy, and adding weeks to their journeys. These canals are more than engineering marvels. They're arteries of global trade, conferring immense strategic and economic power. Whoever controls these choke points holds sway over the flow of goods and the fate of economies. The 2021 Ever Given incident in the Suez Canal was a wake-up call. One ship, 6 days, and nearly $10 billion in goods delayed daily. The world watched as a single blockage brought global trade to a standstill. It exposed the fragility of global supply chains and the risks of relying on narrow passages. Even a brief disruption can send shockwaves through industries and economies worldwide. For export-driven nations like China, these vulnerabilities are existential threats. A blocked canal can mean billions lost and critical delays for manufacturers and consumers alike. As the world's largest trading nation, China's economic future depends on the smooth, uninterrupted flow of maritime trade. The stakes are high, and the world is watching to see how these vital arteries will shape the future of global commerce. In Beijing, the lessons of canal blockages have inspired a sweeping new strategy. China's planners are reimagining the world's shipping lanes, determined to reduce dependence on distant, vulnerable choke points. Their approach isn't about building a single new canal, but about diversifying routes through investment, diplomacy, and infrastructure. The goal? Create a portfolio of shipping options, from the Arctic's northern sea route to deeper influence over the Panama Canal. This vision is powered by the Belt and Road Initiative, especially its Maritime Silk Road, financing ports from Sri Lanka to Greece. These aren't just commercial ventures, they're strategic outposts, extending China's reach far beyond its shores. For China, ensuring its goods move quickly and cheaply is vital to maintaining its global edge. By building a web of new and improved routes, Beijing is positioning itself at the center of global trade for decades to come. One of China's boldest and most ambitious moves on the global stage is unfolding in the Arctic, where rapidly melting ice is opening up the legendary Northern Sea Route, a passage that was once considered impassable for most of the year. This shortcut, which hugs Russia's northern coastline, could shave as much as 2 weeks off the traditional journey from Shanghai to Rotterdam, dramatically reducing shipping times and costs. China is already making its presence felt in the region, officially declaring itself a near-Arctic state and stepping up its involvement in Arctic research, diplomacy, and commercial ventures. In 2025, a landmark voyage from China to the UK via the Arctic will mark a turning point, signaling China's determination to make this once-rare route a regular part of global trade. But the Arctic remains a treacherous frontier. The shipping season is brief, the ice can shift suddenly and unpredictably, and the environment is incredibly fragile, home to unique wildlife and ecosystems that are easily disrupted. Specialized ice-class ships and highly trained crews are essential for safe passage, and the risk of environmental disaster, such as oil spills or accidents in these remote, icy waters, is alarmingly high, with limited capacity for rapid response. Politically, the route is fraught with tension. Russia asserts control over much of the passage, while other nations argue that these are international waters, leading to ongoing disputes and diplomatic challenges. Navigating these complex geopolitical and environmental obstacles will be as formidable as breaking through the thickest Arctic ice. For China, Success would mean opening a new, faster maritime highway to Europe, potentially transforming global trade routes and boosting its economic influence. But the risks, environmental, political, and operational, are immense, and the stakes could not be higher. While the Arctic remains a long-term bet for global shipping, with its icy waters and unpredictable conditions, China is not waiting for the far north to thaw. Instead, it is already seizing opportunities in more accessible, if volatile, regions. China is actively exploiting the shifting dynamics in the Red Sea, a region that has become a critical artery for global trade but is now fraught with risk. Recent attacks by Houthi militias have driven most international shipping lines away, as insurance costs soar and the threat to vessels grows. This has forced many companies to take the long and costly detour around Africa, adding weeks to their journeys and millions in extra expenses. Yet, in a striking contrast, Chinese ships continue to sail through the Red Sea, undeterred by the dangers that have scared off their competitors. This is reportedly thanks to quiet diplomatic understandings with Iran, the main backer of the Houthis, allowing Chinese vessels a rare, green lane through troubled waters. This privileged access gives Chinese exporters a significant edge, one that is reshaping the competitive landscape of global shipping. By avoiding the long detour, Chinese car carriers can save up to 18 days and hundreds of dollars per vehicle shipped to Europe, making their products more attractive and affordable. In June and July 2025, this advantage became especially clear. Chinese car carriers dominated the Red Sea, moving swiftly, while rivals were forced to take the long way around. Competitors, meanwhile, faced delays and higher costs, struggling to keep up with China's pace. The result? Chinese electric vehicles reach European markets faster and at lower prices, undercutting rivals and gaining valuable market share. But this advantage is precarious, balanced on a knife's edge. It relies on unstable regional politics and informal deals that could unravel at any moment, leaving Chinese ships exposed. Any sudden shift in alliances or escalation of conflict could put Chinese vessels at risk and trigger a global shipping crisis. Rivals and critics see this as China bending the rules for commercial gain, raising questions about fairness and the future of international shipping norms. It's a high-stakes gamble, one that could deliver massive rewards for China, or backfire spectacularly if the fragile balance collapses. China isn't just creating new routes, it's deepening its grip on old ones, like the Panama Canal. As a major user, China has a vested interest in the canal's smooth operation, especially for energy imports. Panama's $8.5 billion canal expansion is a prime opportunity for Chinese investment, with state-owned firms already operating key ports at both ends. This growing influence alarms Washington, which sees the canal as vital to U.S. interests. The U.S. is pressuring Panama to limit Chinese involvement, citing security concerns. Panama is caught between lucrative Chinese investment and its historic ties to the U.S. This tug-of-war is part of China's broader maritime Silk Road, which includes ports from Greece to Pakistan. Each port strengthens China's global logistics network, ensuring its ships have friendly harbors and clear paths to market. China's maritime strategy is about more than speed. It's about global economic dominance. By pioneering new routes and investing in ports, China is slashing shipping times and costs. In the auto industry, Chinese EVs reach Europe weeks ahead of rivals, thanks to Red Sea shortcuts. For electronics, a 2-week Arctic shortcut could be transformative, getting new gadgets to market faster. Even for low-margin goods, cheaper shipping can make the difference between profit and loss. Over time, new routes like the Polar Silk Road could shift the geography of trade, boosting northern ports and sidelining traditional hubs. China isn't just making its own trade more efficient, it's reshaping global commerce to its advantage. The world's supply chains are being redrawn, with China at the center. China's grand maritime strategy faces serious risks. The Arctic route depends on unpredictable ice melt and carries huge environmental dangers. Russian control and Western suspicion make the region a geopolitical minefield. The Red Sea shortcut is built on fragile, informal deals that could collapse overnight. Relying on unstable militias is a dangerous game. One misstep could mean disaster. In Panama, U.S. resistance to Chinese involvement is fierce, creating a tense standoff. Smaller nations are caught between economic opportunity and security alliances. China's assertive moves are fueling global tensions and prompting rivals to rethink their own supply chains. The era of open, collaborative maritime trade is giving way to fragmentation and competition. China's maritime strategy is redrawing the map of global trade. By opening Arctic routes, securing Red Sea shortcuts and investing in Panama, China is challenging a century-old shipping order. The world is responding with a mix of alarm and adaptation. Alliances are shifting, and new supply chains are emerging. Developing nations see opportunity in China's investments, while the West grows wary. The dominance of the Suez and Panama canals may fade as new corridors rise. Shipping lines must now navigate a complex web of routes, shaped by politics as much as geography. The next chapter of globalization will be defined by competition, security, and shifting allegiances. Who controls the world's trade routes will shape not just prices, but the future global order.